daily on Bloomberg Quint.
You're watching Countdown right here on Bloomberg Quint. It's softer day of trade for the benchmark indices. Banks losing some more steam and dragging on the index as well. We'll talk about all the moving parts in just a few moments, but to quickly run you through the headlines for the time being. It's a lackluster day of trade for the markets. The Nifty trades in a range on low volume. Sectoral indices present a mixed picture. Shots continue to pile up in oil marketing companies as crude prices re-enter the bull market. Tata Motors is the top gainer on the Nifty today. BBC reported that Jaguar Land Rover is planning to cut at least 5,000 jobs in the UK. An analyst believes steady deal wins and a weaker rupee will help TCS post good numbers in the third quarter. Bandhan Bank's asset quality saw deterioration in the third quarter. The lender's provisions have nearly tripled compared to the previous quarter. Good afternoon, Neeraj. After 3 straight days of gains, looks like markets taking a breather.
Yeah, I think that's the right term, breather. It's not really a sharp fall or anything, just about 0.25% for the large caps and Sensex as well. The Nifty Bank, though, should come up on your screen. Touted as the stronger of the indices, is not quite looking as strong in the session today. Maybe the PSU banks have stopped giving support, and a couple of those large private banks are also not moving as much as they did the last couple of days. So a bit of a breather for the banks for sure in the session today. The mid caps and the small cap indices will also come up on your screen. And I would reckon that, they started off marginally flattish, and it's about 0.5%. So outperformance compared to the large caps, but it's just about 0.75% kind of outperformance. Nothing really to write home about. Devina will speak about the mid caps. Ahum will speak about the derivatives. Let me start off with what the heat map is looking like. And it's almost as it was at the start of the trading day today. Slight edge to the losers, and the stocks which are falling have larger falls. So IndusInd Bank about a couple of percentage points lower. Oil marketing companies were under pressure from the start of the trading day. They continue to remain under pressure. Axis Bank, the last couple of days, has been one key performer, but that is down in the session today. And I think that's the point that we're trying to make. Private banks are not quite having a good day today. ICICI Bank, Axis, IndusInd Bank, Kotak Bank down about 1.5% as well. Yes Bank is down. HDFC is down about 0.5%. So private banks and private financials on the Nifty have taken a bit of a backseat. These are heavyweights, and which is why some pressure. What's doing well? Autos slight bounce back. So Tamo, Mahindra & Mahindra, Bajaj Auto, Eicher, that's the basket that is moving up, but it's more a bit of a recovery from the lows. Nothing meaningful really that we're seeing in that pocket as well. So weakish breadth, Devina. Stocks falling are taking a real breather. The bounce back boys are just the auto names which aren't the strongest pack. What about the mid caps?
Mid caps are doing slightly better off compared to some of the larger names. So we've got specific pockets and specific stocks that are buzzing about in trade today. I'm going to start off first with the Bandhan Bank that actually reported its numbers just a few moments ago. Profits came in at 331 odd crores, and the initial reaction to the numbers was on the upside. The provisioning numbers, like we highlighted before, have seen a sharp uptick on the back of the IL&FS account, but nonetheless, their net NPAs this time around have seen a flattish move. So 0.70 is where the net NP numbers stood at. Taking a look at Group Finance, it takes a breather from the carnage that we've seen in the last 3 trading sessions. So the stock has actually moved up in today's trade by about 2.25%, and a Delta Corp on the back of its numbers has gained ground by about 0.5%. Moving on, banks are seeing some pressure in today's session, and not just the large names, the smaller names like UCO Bank down 1.5%, Allahabad Bank down 0.5%, and Syndicate Bank also loses 0.25%. Fertilizer stocks, this is a theme that's playing out amongst most of the fertilizer names. In fact, all of them trading with gains, and RCF is up 6.5%, Chambal Fertilizers 2.5% higher, and you've got a Deepak Fertilizers which is up 1.7% as well. Stocks gaining on the back of volume, so you've got Linde India which has traded almost 25 lakh shares, that's up 10%. Aarti Industries 3.7% higher on the back of volumes doubling, and an ICICI Pru which is up 4.3%, trades 30 lakh shares in intraday trade. Let's take a look at what's happening in the futures and options space. We've got Agam Vakil joining in to run us through the latest. Agam.
Thanks, Devina. Well, what we're seeing right now is the benchmarks are trending lower by around 0.3%. What we're also seeing is in terms of the futures and options space, well, about 3% added in open interest. The Nifty is currently at around 10,860 odd levels, and well, at least as far as the January futures go. And the Bank Nifty also seeing about 2.5% gains in open interest. Of course, these are shorts building up for both these indices. Moving on to the other variables, we have very little change in the India Volatility Index, which is at around 15.4. And moving on to to open interest change as well, we're seeing more writing around the 11,000 call mark. That's where we're seeing that is where you have the most amount of resistance to. Given the fact that the Nifty has come off to a certain extent, we're also seeing well naturally more writing then. But we are also seeing writing around the 10,800 put. Let's talk about your changes in open interest and see where there's most traction. If we can pull that up as well. Okay, so there you have it. And let's move on and take a look at some of those stock futures. That's your open interest distribution. So the 500-point range that we're looking at. Let's talk about stock futures, and Torrent Pharma is the one which is seeing 25% surge in OI. That's followed by something like, okay, so that's seeing fresh longs. Let's bring on your other counters. Among others, we have Amara Raja Batteries, which is also seeing fresh long positions. Moving on to your other stocks, we have Max Financial, which also advances in trade, about open interest surging by as much as 20%. And we have ICICI Prudential also seeing fresh longs. So, well, 4 stocks advancing in trade with considerable open interest build up. And we're going to keep an eye on that one, even as the benchmark indices continue to tumble today.
Okay, Agam, thanks very much for that. We'll leave it at that. That's the futures and options wrap out. Taking a look at the market set again, so still holding on to those losses of about 0.25% or so. Nothing much happening on the currency side either. So 70.55 is where we are at. Advanced decline ratio, again, an even keel in today's session. 770 advances versus 744 declines in intraday trade. This is probably a trend that we've been seeing over the last 3 trading sessions. By the end of it, it's absolutely flat in terms of gains and losses. Bringing in Sindhu Samir, he's joining in from Emkay Global Financial Services. Thanks a lot for taking out the time, Sindhu. What's the environment like? What's the outlook in terms of at least the way we've started progressing and the way we've started the new year? It's not been bad. But overall, keeping in mind this time around the investments in the mutual fund space that started to come off a bit. Was that a bit worrisome according to you?
I don't think so. That's a big worry. One is that there is a structural upswing in the mutual fund portfolio led by the SIPs. Now, if that itself keeps its momentum, it can be a huge opportunity going forward for that. Above that structural upswing is the icing on the cake in terms of what is known as a short-term money or hot money. That might see some kind of a reversal, but the story to be told, the story to be digested and story to be reassured is the structural upswing in the mutual fund space thanks to the SIP. Also, the message has gone down the road that this is the way to generate long-term wealth in the equities market. This is a kind of a story which developed in the American markets in the 60s and propelled the American markets right from the 1960s to the early 90s. So this seems to be building a story. I don't think so that you can say a relative lack of momentum in the mutual fund inflows is a deal breaker of any kind or any sort.
Okay. What's the outlook as we move ahead in terms of the pickup in volatility, in terms of the earnings season?
So let's not limit the discussion only to this particular earnings season. Thankfully, the start of 2019 is starting with a very limited amount of hope. The same was not true for the last year or perhaps last to last year. Now, if hope is of a limited value in a stock prices, at least the business fundamentals are better represented. What is the most dangerous thing for stock markets or stock prices is huge amount of optimism which gets built into the stock prices. Now this can be a tumultuous year, there is general elections, there is no doubt about it, but earnings momentum after 3-4 years is showing incremental robustness. At the end of the day, businesses exist for two things. One, for earnings, and second is the generation of shareholders' wealth, which is reflected as net worth. If those two vectors get delivered, the external environment can turn toxic, but at the end of the day, it cannot harm or break the party. I am using the word party in a metaphoric term, not in the real term. Cannot break the deal which the Indian equity markets or the returns which the Indian equity markets have promised for the last 15 years, and I'm reasonably sure will be promising for the next 5 or 6 years.
All right, let's talk about the IT sector now, Sindhu, and that's going to be in focus as TCS reports its numbers today post-market hours. What's it going to look like? I mean, we've seen the volatility in the currency, but the expectation is that they're probably going to be okay and manage to stick on to their margin guidance of about 26%.
Yeah. So let's take IT sector. Despite all the existential crises, all the kind of existential threats, the arrival of artificial intelligence and all that stuff which has been peddled in its way, IT sector for last 3 years has been the most stable sector in terms of delivery of at least 11 to 14, 15 kinds of earnings growth. Now step back, that is a kind of earnings growth which is not available in much of other sectors in India. So we have to heave a sigh of relief that this sector is not going away or getting vaporized, as there was a fear that this sector will face structural headwinds. That has not happened. Going forward also, with the kind of dividend yields and the buyback yields which are getting built, and any kind of a return, earnings return of between 7 to 11%, which means that this is a sector which is offering a lot of defense in the portfolio. So even if there is no much of a multi-bagging opportunity available in the sector, there's tremendous amount of defense. And behind the construct of any portfolio, there is both a reasonable offense and a very reasonable defense which needs to be built. So IT is that sector. Also, the rupee has come back to 69, 70 levels. So it's not that there is tremendous amount of hope which is there in the stock prices. The stock prices have taken cognizance of a appreciating rupee. From these levels, I think things cannot get worse. Of course, it cannot be a repeat of 2017 and 18 where there was tremendous amount of re-rating which took place in this sector. So it is what they call even Stevens for this name, for this space or this sector.
So Sindhu, where is it that you're putting your money on? In the sense that right now, leaving aside if you said you don't want to limit yourself to Q3 earnings, maybe a projection 1 year hence, the pockets of most value according to you right now?
So in terms of my money, and on a lighter note, the best thing I would have done 10 or 15 years back is to buy an index fund. Now look at the long arc of returns which has been generated in the index funds. In 1991, just to put things in perspective, the index scaled 1,000 and today it is 35, 36,000. So if any of the viewers cannot do anything in life, he can simply buy an index fund. And when you do that, you buy a slice of corporate India. So if nothing else, at least nominal GDP-led growths can be delivered from an index fund. On a serious note, I think sector-wise, consumption still stands in glorious isolation. That is one sector which will definitely perform. Of course, the crude has plunged from 85 to as low as $53. There will be savings in excess of $20 billion. So that money has been taken out from one pocket and will be delivered to another pocket. Essentially, I believe that it will be consumption which will be wetted up again because of this saving. So consumption, though not very affordable valuations, but in terms of the robustness of business models, there is no other example. So this will be definitely a very strong sector to watch out for. There is a long runway for corporate banks. There is a long runway for private banks. Also understand that there is a two-vectored value migration taking place in favor of banks. One is from public sector to private sector banks, and in last 2-3 months from NBFCs to banks. So you are getting a twin vectorized value migration taking place for private sector banks. So that again is a great opportunity. Autos this year compared to last year will not be that smart opportunity, because last year itself the entire auto space except for 1 or 2 names melted by 25 to 30%. But going forward from here, earnings-led growth will definitely be available on auto space. Of course, there is a caveat that re-rating is not a possibility. Pharma, again, tough to predict, but then the valuations in pharma are not as ugly as they were in 2016. So the valuations corrected there, the earnings dropped by 20-25%. From here, if somebody has a 2 to 3 year vision about pharma, he's welcome to invest in the bellwethers. So these are 3 or 4 sectors which look very smart at the moment, but please remember that there will be some macro challenges coming from the political front, coming from America, where there is a heightened expectation of a recession after 10 years of recovery.
Okay, Sindhu, we'll leave it at that. Thank you so much for taking the time out and being with us today. Appreciate your time.
Thank you very much.
Okay, that's Sindhu Samir of Emkay with his thoughts. Okay, on to a conversation on a very interesting report, the India Outlook 2019. Now remember, 2018 was a disappointing year for the Indian markets. One started to scale record highs during the year as well. Multiple headwinds saw the markets ending the year with little or no gains whatsoever. Does 2019 hold the same, or could it be different? Credit Suisse Market Outlook and Strategy Report expects moderate returns from the markets this year as well. Let's discuss this along with some of the other key subjects with Jitendra Gohil, the head of India Equity Research at Credit Suisse Wealth Management. Good having you, Jitendra. Thanks so much for joining in.
Thank you, Neeraj, for inviting me.
No, pleasure. What's the base case? Is it going to be a dull year, a dull return year across, or would you believe that the headline numbers might not look as exciting, but there will be opportunities for pockets of significant outperformance?
See, what we think is that if you look at just valuation perspective, India is fairly valued or slightly more stretched. So we think it's a perfect recipe that India might see some kind of de-rating in 2019. However, we are very positive on the earnings growth. So last 3-4 years, if you look at Demon, GST, back-to-back drought years in 14-15, now the base is low. And we think that the corporate banks are coming back to the fore. We think that the earnings are going to accelerate from here, and hence we are expecting something close to around a high teen kind of growths in earnings. And if you look at 10% de-rating,
that's FY20, I assume, or FY19.
Yeah, FY20 next year. And if you assume that valuation de-rating of around 10%, that means we are looking at somewhere higher single-digit return for Indian equities. Having said that, if you look at last year, the rally was largely concentrated. India was one of the best performing markets, but there are a certain number of pockets, the stocks which have not done that great. So there are a lot of buying opportunity exists. So if you can generate 3-4% alpha, probably we can expect around 10 to 15% kind of return in a base case scenario in equity. That's what we are looking at.
But you are saying, and I think there's this very interesting chart that you've given in a report as well, about the earnings momentum, while at a slower rate than consensus expectations, will accelerate quite well. So what is the base earnings growth numbers that you believe the markets could clock in FY20?
So every year you start with 20,
higher number.
But this year what will happen is that the base is low in certain corporate banks, as I mentioned. Okay, some banks are coming out from higher NPA recognition, but that is behind us. So that will give you a delta. Some of the companies who have reported losses this year, FY19, will turn profitable next year because the one-time losses will go off. However, the deviation could come from oil prices. Okay, so the oil marketing companies are also having a lot of bearing on the EPS. So probably there could be a mark-to-market inventory gain or losses. But net-net, we can see that the earnings growth will be much higher than the nominal GDP growth. That's what our base assumption is, and hence we think that higher teen kind of a growth is expected. While consensus is expecting around 22% growth in March 20, we think that even if after considering 4-5% cuts, still 18% kind of a growth is a pretty good number to start with.
That brings you back to the point that at that time, the valuations will nonetheless still be higher than its 10-year average that it's been trading at. So, will you see that kind of money coming in at those valuations?
So in terms of valuation, we think that India will de-rate from here onward. So 12-month forward PE ratio, if you look at, is close to 16-17. It can come to around 15-16. Remember, there is an election year. Also, there is a lot of uncertainty on the trade front. You have a Brexit negotiation which is going on. There could be some problem in Italian politics. So the volatility is high. In that scenario, we think that because valuation is so stretched, to give you some color on that, if you look at the MSCI India valuation premium compared to the emerging markets, is at around 65%, which is all-time high. Versus developed market is at 7-year high, right? So this kind of valuation is not sustainable. That's what we feel. There could be some kind of deterioration in valuation. However, the earnings growth will make up for that, and hence you can expect a higher single digit. That's our base case. But if you look at FII flows, last year we have seen 4.5 billion of outflows. Generally we see positive, flows in Indian equity markets. But we think that in 2020, if Fed goes slow on their rate hike, which is our case right now, we think they can pause if the global economy is not doing great. Then USD might depreciate against major currency, and in that case, emerging markets will back be in the favor. So we think Chinese numbers are surprising on the downside, but in a couple of months it could stabilize, and then we see most of the FIIs might turn positive on emerging markets, and including India as well.
Okay. Let's talk about asset classes now. I mean, while we've spoken primarily about equities, we've seen the trend that at least now bulk of the concentration and the investments are happening in the bond market. Do you see that having a greater potential of return in the equity markets for the year?
We see the corporate bond markets, if you look at last few months, because of the stress in liquidity, the corporate bond market is becoming slightly more attractive. The spreads between corporate high quality companies versus the 10-year yield is around more than 120 basis point right now, which is a bit attractive. So I think that that space has opened up to go overweight on corporate bonds in India, and we like some of the corporate names which are giving yields of around 8 to 9% basis. So I think that's the threshold I would look at for the equity market as in terms of asset allocations.
Currencies?
Currency, we think that USD has strengthened enough, and from here onward we might see USD could weaken further, US dollar. That is because we think that Fed is going to go slow on their rate hike path. They will be more patient. From Indian perspective, I think there are a couple of factors which will play out. One is the fiscal deficit. We think that fiscal headroom for government is very low, and going into election year there could be some chance that they might slip on that front, which may have hurt currency. We are not really oil bulls, but we think that oil prices have undershot. From here onward it can inch up higher.
They've already inched up higher a bit in the last few days.
Yes, last 2 weeks it's up around 20%. We think somewhere close to around 65, 70, it can go to that level, which can also trigger some outflows from FIIs, and CAD and fiscal issues might again resurface. So we are negative on INR. We think that it can
actually at 65, if the crude comes to 65, we are comfortable at CAD. In fact, we should be around 2% at CAD.
Yeah.
For CAD, if we take 65.
Yes, you are right. We think that 65 to 70, I think it's a comfortable range. But when oil prices will go up, we might see some kind of deterioration in INR exchange rate. and also the fiscal deficit worries are resurfacing. So net-net, we think that INR will depreciate. We are negative on INR as of now. We think it can go to around 73 levels over the next 12 months. But we are not like really saying that it will go back to the previous lows.
Okay. Interesting. What's the call on the bond market? I know you briefly probably alluded to that as well, but two conflicting factors at play, right? One is that if crude does go up to $65 or $70 per barrel and the impact that it would have. At the same time, the point that you mentioned, the Fed, and I think in the last 15 days, alone, in such a narrow time frame, I've read articles on Bloomberg.com which speak about traders bracing themselves for a cut in rates to as recently as yesterday, wherein the mood has again changed from a cut to a pause. A hike is out of the question completely, but a pause to a cut to a pause. So there's a lot of uncertainty around what the Fed will do. What happens to the Indian bonds in such a scenario?
See, if you look at the yields in India, it has come off around 80 basis points from its peak, right? 8.25.
8.25 to 7.5.
If you look at in China as well, the yields have fallen by 80 basis points. If you look at in US, it has fallen by around 60 basis points from peak. In Europe as well, it has fallen. So globally, the yields have fallen, right? On top of that, the oil has fallen. That benefit is there, and plus you are seeing the inflation continuously surprising on the downside. So there is a high headroom to cut interest rate. That's what the scenario is. However, my question is, when you look at the fiscal deficit of state and central, okay, 3.3, 3.5 central, and another
GST collections have also not met.
Exactly. So the deficit funding is to the tune of 11 to 12 lakh crores, state and central together. And if you look at demand from let's say mutual funds, let's say from banks, and plus now RBI is doing OMO to support it, how long it can continue. So we think that largely bond market has come to a halt, and from here onwards yield might see some upward movement, but not a very sharp or something. It depends how RBI will react to in their policy meeting going forward. But net, I think bond market will remain largely well anchored at these levels. We are not seeing a sharp jump in yield, but at least gradual up move from the yield from here onwards.
Okay. If I can drive the conversation back to equities now, and you mentioned in your note that on any election-induced volatility, you would advise your clients to be very selective and bottom-up in their approach as opposed to maybe an index approach. Yes. Now, do you expect any kind of gains that come into select spaces to be as concentrated as 2018 was, or would it be a bit more broad-based, or could it be like 2017, wherein the quantum of gains may be different, but the base of the gains would be spread across?
Yeah, so there are two questions. Let me just break. So why we think that election-led volatility should be used to build up long-term portfolios. So we cater to our wealth management clients, and their horizon is slightly longer. And we think that election-led volatility or any dip in the market could be a bigger opportunity to buy more, because what has happened over the past 3-4 years is a lot of investments have gone into infrastructure. Okay, the initial couple of years of oil bonanza, whatever benefits government got, that has been invested in the infrastructure space, and that benefit is yet to come. India is going to clock more than 7% GDP growth. Structurally, you are seeing the trends like urbanization, we are seeing trends like consumption, demographics. So I am pretty much confident that India is going to clock more than 7% kind of a growth on a sustainable 3-5 year perspective. Having said that, political, changes in political definitely hurt the sentiment in the near term. We might see 5 to 10% correction or probably a rally on the election day. But on a longer term perspective, actually election doesn't matter. And what we have seen, even in the policy framework of both the parties, we haven't seen major changes as of now. So we think the structural background for India is very strong, so that can be used as a buying opportunity. Coming to which sectors and how concentrated, we think that the valuation for few companies, large companies, have pretty much stretched now. Most of the FMCGs, most of the consumer staples companies, the valuation is extremely stretched. We think that there will be now some kind of reversal towards the investment side. The private capex has seen some kind of signs of coming up. We are also saying the stress in PSUs are going down, so there will be enough headroom to lend more towards the corporate sector. and the utilization levels in the entire, if you look, the average utilization has been continuously rising. So we see that there could be some opportunity on the bottom-up perspective where new winners will come up. So probably the industrial sector is looking good as of now, but not in a very short term till the election year. But after that, once the election volatility is over, when the new government comes and what's their agenda, but slowly and gradually we think infrastructure will become, coming back to the fore. And we might see some kind of a churning of portfolios from.
But does that look like it could happen now, or that probably gets pushed to once the new government comes in? Because much of the money is anyways going to be, put forth for populist measures as we approach elections. So for capex and for the other crucial expenses get that much more backtrack.
You are right, absolutely. So in the initial 2-3 months, we think that consumption driven sectors would be in focus, but that could be just because there is a hope that government might announce some kind of package for farmers, or probably a stimulus for the rural. But we think that government does not have headroom to go for these kind of announcements, and hence we might see this rhetoric will lead to some kind of support for the companies. But that could be a selling opportunity, we think. And then you can look at buying some of the names on the industrials, or probably on the capex side, where we think there could be a value.
All right. It's great chatting with you, Jitendra. Thanks very much for joining, and appreciate you taking out.
Thank you very much. I appreciate it.
An in-depth chat with Jitendra Gohil of Credit Suisse, talking about the markets in 2019. Let's take a look at the move on the index right now. So we look like we're at the lowest point of the day, down almost 0.4%. Okay, not the lowest point, but still giving up closer to 40 odd points. Worsened since the time we last took a check. Banks are losing more, so you've got 0.75% given up for the Nifty Bank. That's 27,500. That's where it's trading at right now. We've got Abhijit Phatak. He's joining in right now with his strategies. Hadrien Mendonca will be joining in as well. Abhijit, let's start off with you first on the index, and what would the call be?
Good afternoon. Nifty is trading in a very tight range between 10,750 on the futures and 10,900 on the futures, or a slightly broader range which is 10,650 on the spot and again 10,920 on the spot. So till then it is going to be a completely sideways market, where buy at the support and sell at the resistance, and maybe go short at the resistance and again buy back near the support. And unless this breakout or breakdown happens, this range might continue for the next maybe 2-3 days. But once this breakout happens, and which my bias is upwards, because Nifty is taking support at a 200-day moving average continuously, then we can have a good run of maybe 200-300 points, maybe up to 11,150, 200.
Is there a trade on the Nifty Bank for an index which is looking largely strong? In today's session, it's corrected. And I remember while yesterday you could have argued that it was a stronger index, day before yesterday it ended at the day's lows as well.
Bank Nifty has run up quite a bit. In fact, what I expect now is maybe the other sectors might lead and Bank Nifty might take a breather. That is what I am expecting. And Bank Nifty, if it breaks 27,400 on futures, it can correct even another 200-300 points. And maybe that might drag Nifty a bit lower. But I would not remain long in banks right now. Maybe some other, in fact, I have given 2 longs. One is L&T and one is Tata Motors. I expect some sector churning, and maybe banks might take a breather.
Okay. Abhijit, so in light of this view on the markets, what are the specific stocks that you're recommending for the afternoon today?
Yeah, 2 stocks. One is definitely looking bullish because it has been going up for the last 4-5 days. One is Tata Motors. One can buy it on dip with a stop loss of 181, and it can go towards 195, 198 in the next maybe a week or so. And the other one, which has been correcting for the last few days, and I expect it to take support at these levels, Larsen & Toubro, L&T. It can be bought near 1390, 1400 with a stop loss below 1370, and I expect that to go back towards 1440, 1460 in the next 1 week.
Hadrien Mendonca of IIFL is joining us on the show as well. Hadrien, good afternoon to you. Let's get to know your index strategy and what you're doing at this point.
Yeah, hi, good afternoon. Definitely there is a profit booking that is witnessed. Now, there is a particular reason why we are seeing this. If you've noticed, both the Nifty and Bank Nifty has failed to surpass its previous day's peak. Secondly, the candlestick pattern, which sometimes play a very important role in actually determining how things can go, can pan out in the coming days. We have seen, a very important reversal candlestick pattern on the Bank Nifty as well as the Nifty. So the Bank Nifty has formed, a dragonfly doji kind of uncertain candle, whereas Nifty has also done the same. So enabling to actually break the highs of previous days, is actually indicating we could see further profit booking. If not, I may say a phase of consolidation. So 4 straight days of rallies and we are seeing a pause. I don't think so there is anything to worry about. The only issue that currently on charts is that yesterday the Nifty broke above the symmetrical triangle that it has been trading into for the past 1.5 2 months. I think that breakout was very important. Furthermore important is the sustenance above 10,850, 10,925 levels. That is going to be an important level to watch out for. For long traders, one can definitely go aggressive longs once we see Nifty surpassing the 10,925 levels convincingly, which could then open the gates for 11,000 to 11,100 zone. But right now, I'm actually slightly cautious because of that uncertain candle that I'm observing both on both the benchmark indices. So I think after a phase of profit booking or consolidation, we'll definitely see resumption of the 4-day rallying trend that we have seen.
All right, and what about stocks?
Yeah, so we've given one long call and one short strategy. So first one is Divi's Lab, and we are pretty bullish on the stock. We have seen a range breakout. Divi's Lab has been consolidating for the past 2.5 to 4 weeks, and I think the range is finally broken out in today's trading session. One can definitely consider going long on Divi's Lab with a target of 1545, placing a stop loss at 1494. And the short strategy is on Ultratech Cement. Cement stocks of lately are going through a phase of selling pressure. Ultratech Cement is actually breaking down from an inverse cup and handle, which can also be tagged as a kind of distribution pattern that we are witnessing on Ultratech Cement. I think one can consider short selling Ultratech Cement Jan futures for a target of 3770, keeping a stop loss at 3845.
Okay. Let's talk about specific pockets with our fundamental guests. Before we do that, which are the stocks that are buzzing in trade? Let's bring in Sharad Dubey, who's standing by with his list. Sharad.
Yes, Neeraj. The first stock I've picked up is Goa Carbon, which has fallen around, more than 1%, falling for the third straight session. So the numbers have been really bad. Actually, the revenues are down almost 50% at around 94 crore rupees, and the net loss was there of around 5 crore rupees. So basically the main reason for poor results this quarter was the planned maintenance and procedural delay was seen across its 3 plants, in which cumulatively 182 days the company was not working. Apart from this, there was a delay in procuring raw materials, and the raw material for this company is the raw petroleum coke. So in last year, the Supreme Court had banned it to be used as a raw material for the fuel. But now the Supreme Court has actually allowed it, which it can be used as a feedstock. Apart from this, the second stock I've picked up is AGC Networks, which has up by almost 10%, risen to its highest levels in the past 3 trading sessions after its Singapore arm completed the acquisition of its US-based digital solutions provider Blackbox Corporation. The company says the combined entity will add around $600 million to the company's revenue and strengthen its presence across 25 odd countries. Apart from this, we have the stock Vakrangi, which is up by almost 5%, its highest levels seen since 3 days after MCA finds no irregularities in its preliminary findings report and on auditor's resignation and stock trading matters. The company is still awaiting the final report from MCA after giving certain explanations. So these are the 3 stocks. Back to you.
All right, Shara, thanks very much for that. Those are the 3 buzzing stocks that we've picked out for you this afternoon. Should pull up a Yes Bank to see the stock and how it's performing. Today is crucial because today is the day when the shortlisted names for the position of the MD and CEO gets handed over to the RBI for approval. Not it out in the public domain yet, though, but the stock in yesterday's session was down 3.5%. Today is down about almost 1%, 185 on the counter. What would you do, Hadrien? with the Yes Bank?
Yeah, we've seen a decent amount of run up in the past 3 to 4 weeks, and Yes Bank is actually consolidating in the past 2 days. Now, this consolidation is actually giving you an early hint that we may see a small phase of profit booking set in. In fact, important levels to watch out for is 178. That is the exact breakdown level that Yes Bank had broken down nearly on the 30th of November. So I think 178 is an important support, and it can also be utilized as a stop loss for every long position that traders have on a Yes Bank. Given if it manages to hold above, we could see Yes Bank rallying towards the 200 levels in the near term. There is a big event as well. So, please, it is advised to keep a strict stop loss of 178 on the downside.
Okay, a bunch of stocks today, they're not trading at 52-week highs. So usually I haven't seen such a large list in the last few days, but in today's session, a fair degree of names. So you can be dismissive about a Maharashtra Scooters because the volumes aren't exactly the most spectacular there. But there is RT Industries with this 3.5% move at 1550 is trading at fresh life highs for itself. There is Torrent Pharma at 1862 trading at 52-week highs. PVR with this 1.5% move trading at fresh life highs. Astral Poly in the morning, I've spoken about it, at 1189, that's trading at fresh highs for itself, and Bata is nudging those levels as well of fresh highs, 1158 and counting. So a bunch of names and some reasonably large names. I mean, I'm not talking about an SPL or a Linde India and the others, but some reasonably large names are trading at 52-week highs and varied across pockets. So from consumption, from exhibition and media, specialty chemicals, autos and holding companies. So a clutch of names doing rather well for themselves. Just a quick thought out here on if any of these names, Abhijit, if you track, all of them are nudging fresh highs.
Yes, the one I'm tracking is RT Industries, and that is definitely looking good for something like maybe 1600 or 1700 in the next few weeks. It is a very bullish stock, and any dip should be used to buy into it.
Okay. So about 1600 in the near term, the stock's already at life highs. TCS, that's going to be in focus. The country's largest outsourcer will kick off IT earnings today. A weaker currency is only one of the factors that's expected to aid TCS's numbers in the third quarter. Agam Vakil, he's here to break down what all are the expectations the street has from TCS. Agam.
Right, Devin, I'm going to start off with the dollar revenue number in terms of expectations, and this is the Bloomberg Quint calculation. We're expecting an uptick of around 1.3% sequentially. But in rupee terms, the dollar revenues are likely to rise 2.7% quarter on quarter based on the Bloomberg mean. Similarly, when it comes to your EBIT margins, well, we're expecting a little bit of an expansion at around 26.6% versus 26.5% quarter on quarter, and profits could rise a little over 3% as well. What are we watching out for? Where is this impetus coming when it comes to your top line growth, despite the fact that it is a quarter marked by seasonality and furloughs, where it is largely the deal wins that the company has seen in the first 3 quarters of calendar year 2018, and that is something that will work in favor of the growth in the top line. We have to remember that the digital revenues, which now contribute nearly 30% to the company, has constantly seen a considerable year-on-year growth. In fact, for the second quarter, it stood at as much as 60% year-on-year, and that is perhaps a continuation that a lot of analysts are also expecting to play out in the third quarter as well. In terms of what we are watching out for is tie-ups in Internet of Things, companies' plans in expansion when it comes to cloud and analytics, as well as agile that the company keeps talking about, and of course the forward-looking outlook, especially when it comes to client budgets and client spendings. It is still early days for us to get an idea about that, but any indication on that would be an added bonus from the management. On the whole, expecting a steady quarter.
Okay, we'll watch out for this steady quarter from TCS anticipated. I remember a conversation with Agam in the morning. We were just talking about the short positions piled on in TCS vis-a-vis the fundamental expectations, and the analysts don't seem to be believing that there are enough material avenues for TCS to go out and disappoint. There's no reason for TCS to do that. If they do, I would reckon it's a big blip which most of the street won't be expecting, and there could be a reaction downwards if they miss estimates. But Having said that, the stock is also approaching this earnings with a bit of caution. I think the last 7 days or 10 days, it's corrected about 4.5% already.
Yeah, the IT index itself, and like we've been tracking how the move has been over the last 6 months. I think we were discussing how it's been taking support at the 200-day moving average for the IT index in 4 occasions in the last 6 months, where there's been a touch and a go with the 200-day moving average. Whether the disappointment comes in and whether you see a crackdown on the stock, which ultimately leads to the fall of the IT index itself under the 200-day moving average, goes to be seen. So right now, still holding stable for TCS, as Neeraj pointed out. There's a bit of caution ahead of the numbers.
Mayuresh Joshi of Angel Broking with us. Mayuresh, what do you make of this? Good afternoon, of course, but should TCS disappoint a little if they do? And if it's not, let's say it's a temporary disappointment, it's because of one-offs that would have happened, would you believe that the street would be unkind? Because everybody's going into this earnings believing that TCS will not be able to do anything wrong. There's no reason for them to disappoint.
Afternoon, Neeraj. Again, I think if you built in a base case scenario in terms of the expectations, yes, largely I think there is a sequential growth that is expected, as Argam was mentioning, to the tune of 1.3 to 1.6% in dollar terms. Even on the EBIT margins front, a large part of the market is of the belief that the 26 to 28% range will be maintained by the company. And again, in terms of the investments that they've probably done in the digital arena, I think they have started being paid back. So when you're talking about digital as a percentage of their overall top line, it's close to 28, 29 odd percent. And the key sectors that probably contribute to the overall top line, BFSI at 31 odd percent, retail, manufacturing, they're still holding ground. Now the flip side of the argument can be how the discretionary spending patterns are actually turning out over the next few quarters. If you look at Accenture's commentary, for example, they have pointed out to some inherent slowdown which might affect both their volumes and the expectations of TCVs coming through. So on that bias, again, I think the US slowdown that might actually take place, nobody's sure to the extent and the depth of that recession, on when and how it will happen, the Brexit scenario, how it pans out. I think those are some factors which will affect the industry as a whole, and TCS is part of that entire industry as well. So again, I think not expecting a huge disappointment probably to come through. But if it does, yes, I think that will get reflected on the stock price. But the belief largely on the street is a stable set of numbers, at least sequentially, that the company should be able to report.
Mayuresh, Tata Motors, for one, is a stock that's holding steady ground in the last few trading sessions. Reports coming out that they are looking to cut about 5,000 jobs in the UK, some cost control measures that they have been taking, and the stock has moved to levels of 185 now. How would you read these internals?
No, so I think there are steps being taken in terms of the optimization that they need to probably carry out, at this point of time. If you look at the recent numbers that have probably come through, I think some encouraging numbers did come through in terms of the wholesale figures that they reported for the US or the North American markets. What they reported for the UK markets as well was a tad bit encouraging from the trend that they've been reporting over the past few months. Having said that, again, a large element in terms of the expected capex that they are expected to do over the next few quarters, the expectations of how the new models fare, the introduction of new platforms and the new models thereof, and the acceptance thereof is going to be keenly awaited. And the entire diesel uncertainty surrounding the European markets is something that will still act as an overhang onto the stock. Couple that up with what probably happens in terms of the China tariffs is something to be looked out for in terms of their biggest markets outside the European Union. So again, I think the recent numbers have been quite reasonable. I think on the domestic front, they have been reporting reasonable set of numbers as well. But here again, I think on the MHCV front, we are seeing some inherent slowdown in volumes happening across industries, whether you blame it on the axle load norms, the inflation that you probably saw in petrol, diesel prices over the last few months, though it's cooled off. I think the lag effect still being displayed. So large element on all these positive factors have probably given way for the move in the stock that you've probably seen. But again, I think where the stock was languishing, I think the worst was probably getting captured in the price. Unless the stock probably starts disappointing all over again, in terms of very, very loose numbers that can hardly come through. So I still believe that the stock is probably stuck in a range unless you have a couple of quarters solid stable numbers coming through on the upside. I think it's difficult to make a re-rating substantially on the upside for this stock.
Okay. Mayuresh, is there an auto anch or auto ancillary company that you guys would be comfortable putting money to work? Because a lot of people say this, that while headline auto numbers may look slightly soft, if they do, auto ancillaries have an aftermarket, some of the auto loans have an export market, and therefore their revenue streams will not be as impacted.
So to a certain bit, Neeraj, it does get affected as well, because a lot of the auto ancillaries were probably attached to the OEM players. And if there is an inherent slowdown in the OEM market itself, which you're probably witnessing, I think the inherent slowdown is displayed in terms of the auto anch numbers, who are very, very reliant on a substantial manner onto the OEM market. Now, a lot of players are also into the replacement market, where the margins are probably better off in terms of how the OEM scenario pans out. So to that bit, again, I think leadership position does matter for the auto ancillary companies. I think a few of the bearing companies is where our focus was in the earlier part of this calendar year. So I think FAG bearings is something that I'm comfortably holding on even at this point of time. And my own sense is that with the kind of mergers that they've done internally, INA and Luke, which have probably come through, I think the diversification in terms of the product line is probably there on the cards. So they've got MHCVs, they've got PVs, they've got two-wheelers in their product suite as well as a combined entity in terms of reported numbers. And even on the margin front, my own sense is that the margins are quite stable enough at this point of time, and should be, both in terms of how the different subsidiaries are performing, the expectations of price hikes expected to be taken place specifically in the replacement market. So I think if I have to pick and choose, I think FAG bearings is something that I'm holding as a clear disclaimer. This stock, in my opinion, can be a very steady compounder over the next few years.
Got that. Mayuresh, we'll have to leave it at that. Thanks so very much for joining us. Appreciate your time.
Thank you so much.
Bringing in Sanjeev Hota, he's joining us right now to talk a little bit more about how the quarter and what the quarter is bringing in store for IT companies. He's joining us from Sharekhan. Sanjeev, thanks very much for taking out the time. Let's pin it down to what the expectations are from the top 5 IT firms.
Yeah, this quarter, as you know, is the seasonally weak quarter for the sector because of furloughs and lower working day. Despite that, we are expecting a decent kind of show from the top tier IT companies in the range of 2% to 3.9% kind of constant currency revenue growth. And also the rupee tailwind will help the companies to report a decent margin expansion. And the company like SL Tech, it is going to be a mixed change that is going to help them for the margin expansion. So overall, it's going to be a decent quarter for the sector.
Okay. TCS reports its numbers today post-market hours. Most analysts believe that there's nothing out of the ordinary, at least on the downside, or any disappointments that should be expected from TCS. What does it look like that TCS could clock in? We're factoring in closer to about 3% in terms of profit growth, 1.3% dollar revenue growth. What have you factored in?
Yes, similar to what the street is currently building at. My expectation stand at a 1.9% kind of constant currency growth, and on a reported basis, because of the cross currency headwinds, the reported dollar figure will be 1.2%. Margin expansion will be close to 40 basis point, and net profit growth will be close to 4% Q on Q and 25% Y on Y because of the low base effect of the last year. But the thing that need to watch out for TCS, if you see the last 7-8 quarters, the digital has been the driving force for the TCS, which has doubled its revenue from last 7 quarters and contribute almost 93% of the incremental revenue for TCS. So that need to do well going forward also if TCS is going to drive the double-digit growth numbers that management has alluded in the last quarter. So it will play a very big role in the TCS performance going forward also. And I believe the kind of deal wins that TCS had in the first half, if you see 9.88 billion, and out of which 1/3 is from the BFSI. So ingredient is there for TCS to surprise even on the upside. But we are taking 1.9% kind of Q-on-Q growth, but ingredients are there for TCS to upside. And I don't see reason for them to disappoint, and if at all they are going to disappoint, definitely stock will see some kind of a derating from here on, because it's already trading at 22 times, 20 times forward.
Do you see the currency volatility playing up in the Q3 numbers?
If you see the cross currency is a dampener for the quarter, 70 basis point will be the impact on the top line. But the rupee has depreciated this quarter close to 2.7%. So that will act as a tailwind for the margin front. So overall, I don't see the currency impact on a negative side this quarter on a net basis.
Okay, let's talk a little bit more about the deal pipeline, and do you see those multi-million-dollar deals flowing in? Because as you said, it's a seasonally weak quarter, but for the larger names like TCS, Infosys, even a Tech Mahindra, they've been seeing these deals flowing in quite regularly.
Yeah, you rightly said. If you see, as I said earlier also, TCS has clocked almost 9.8 billion kind of TCV win in the first half, and same for the Infosys. They have also a good deal wins in the in the first half. So both the management is quite confident on the deal pipelines going ahead, and they also said that CY 2019 also seems to be on the positive side. So it's very too early to take a call on how the CY 2019 is going to pan out for the sector, given that there's the volatility in the globally, and there's a Brexit, and there's the trade war, and other things are there in the place. But the kind of confidence that Indian incumbents are saying, I don't really see any disappointment on the card, at least for 2020 going forward. And the state is building it around higher single-digit kind of growth for the sector, and that thing, I don't really think that is not going to be there for 2020.
Okay. What are you going to be watching out for in terms of management commentary?
The most important for TCS, I believe, the digital momentum. If you see last quarter, it was strong. Even for the last 7-8 quarters, as I said, is doubled, and the 93% contribution to the incremental revenue. So digital momentum is very important for TCS. Last quarter, they had won like 15 deals in the blockchain technology, and they had a good win in this area. So apart from digital, how the BFSI and retail is panning out, there's the second important question to be asked to the management. If all this thing is there going forward, I don't see why TCS is not going to grow double digit even in the FY20. So this thing are going to be asked, and this the third thing is on the margin front, given that the rupee tailwind is going to be there, at least for in the medium term. So if they are having any margin guidance improvement, they don't give guidance as such, but 26 to 28% band they give earlier. So if they are a bit more comfortable inching that guidance upward, that need to be asked.
All right. And if you were to have your pecking order within the IT space, amongst the largest 5 IT names, what would the pecking order look like?
Oh, my pecking order will be Infosys, then TCS, Tech Mahindra, and in the mid-cap space, it is LTI.
Okay, got that. Sanjeev, we leave it at that. Really appreciate you taking out the time and joining in on this discussion. That's a quick take from Sanjeev Hota, covering the IT space and what is expected out of the Q3 numbers this time around. Well, time now for a very short break right here on Countdown. On the other side, we'll get you the Fab 4 stocks of the day. At 3:15, we'll tell you what dealing rooms are recommending and some closing ideas towards the end of trade. Take that break and be right back.
Delegates of over 100 countries, 15 partner countries, 10 partner business organizations are uniting on a global stage. They will also witness the India's biggest trade show, new opportunities for trade between Gujarat and Africa, Ahmedabad Shopping Festival, MSME Seminar, futuristic technology exhibition. Watch the unfolding of Gujarat's future in Sprint 2022 and experience much more. Welcome to the 9th Vibrant Gujarat Global Summit, 18th to 20th January, Gandhinagar.
What started out as a quest for good coffee has turned into a single estate specialty roast coffee connoisseur's paradise.
It was purely, this is something that we want. We're looking for good quality coffee.
Theirs is a story of starting something amazing and new and refreshing.
It wasn't just Matt and me who were taking this journey to change the coffee landscape in India, but it was actually going to start from the farms.
The face of coffee in India has seen a sea change in the last few years. And it's owed now in a small way to Matt and Namrata, the founders of Blue Tokai Coffee Roasters. Watch their exceptional story only on Bloomberg Quint.
Welcome back. You're still with us on Countdown. 28 minutes left to go for market closing. The Nifty has recouped some lost ground, so 10,835 is where we are trading and down just about 20 odd points. Banks also have picked up from the lows of the day, so the Bank Nifty now down 150 points. That's a 0.5% given up, 27,569. Quickly looking at Europe and how we've set up for trade out there, and then take a look at the Dow futures as well to give you some perspective on how the global markets are trading at this point. So in the red, down for Europe, FTSE is down 0.5%. You've got the CAC and the DAX also trading under by a similar percent. Dow futures trading under by about 0.6%. So the setup is looking slightly more weaker this afternoon. No support coming in from that front. Looking at the advanced decline ratio, we'll take a look at the turnover as well. But before that, let's go across to Somit, who's joining in right now with the list of the Fab 4 stocks of the day. Somit, good afternoon.
Good afternoon. So if you see on the Fab 4, first we have is Bandhan Bank. Now the stock rose as much as 4% after it reported a good growth, and its NII grew around 54%, while the bank also said that they are fully provided for this IL&FS exposure, and that's the reason why the stock is up around 4%. Aarti Industries, that stock is also up around 4%. It's at its fresh highs, and the stock, and if you see the volumes on this counter, is nearly 4 times its 20-day average, and that's the reason why the stock is up nearly 4% in trade today. Len India, now that stock is up nearly 9% in trade today. Now this is after the company released its fresh proposed delisting plans and the timeline of that plan, and after that the stock gained nearly 9% in trade today. Lastly, Hotco, now that stock gained nearly 2.5% so far in trade today, and that is after the company gave up the quarterly updates, and in that quarterly update the company said that their loan sanctions were up nearly 2.4%, while the loan disbursed compared to last year were higher by nearly 66%.
Okay, Somit, thanks very much for that. Some flashes coming on your screen with regards to some changes on the GST side. The GST Council meet comes to an end. They have, in fact, gone ahead and increased the exemption threshold for small businesses from 20 lakhs to about 40 lakhs. So at present, in fact, businesses with a turnover up to 20 lakhs are exempt from paying the goods and services tax, but now that's increased to about 40 odd lakhs. All right, I think the Haryana minister is speaking. Just let's cut across.
धन्यवाद।
सिन्हा जी, सुप्रीम कोर्ट ने आज अपना केस, अयोध्या का जो केस है वो अर्जन।
What is it? All right, we'll cut back to that in just a few moments from now. But keeping it with the markets, Nitasha, Shankar, head of portfolio investment advisory at Yes Securities, is joining us on the show right now. Nitasha, how is the setup looking like according to you now as we've entered into the new year? There are still a lot of headwinds. You've still got global issues that you need to, there are challenges. So you've got the trade war, the global economic slowdown, you know, what's happening with the Fed rate hikes, so the pace it has come off. But how would you position yourself?
So essentially, if you're looking at the global outlook, there are a few headwinds which are there in the market. I mean, amongst the list that you just listed out, I think I would just add Brexit to it as well. But if you're looking at the domestic side of the economy, if you're looking at consumption, you're looking at retail, there is a lot of traction coming in over there. And we think this is a good time to use any kind of dips that come into the market to try and accumulate these stocks.
Meeting of the GST
All right, let's cut across to the finance minister talking.
There were several items on the agenda which really dealt with the structure and the procedures rather than any individual item. Those individual items we had discussed on in the last meeting itself. तो कई important निर्णय थे जो काउंसिल में हुए. पहला निर्णय था कि कॉम्पोजिशन स्कीम में पहले वर्ष में थोड़ा कम रिस्पांस था, लेकिन दूसरे वर्ष में थोड़ा इंप्रूव्ड रिस्पांस है और कॉम्पोजिशन के माध्यम से प्रोसीजरल सिंप्लिसिटी भी है, सिंप्लीफिकेशन है, सहूलियत है और जो छोटे व्यवसायिक हैं, चाहे ट्रेडिंग में हो या मैन्युफैक्चरिंग में हो, वो बहुत कम प्रोसीजर्स के साथ इसका लाभ उठा लेते हैं और इसमें जीएसटी का जो रेट है वो बहुत कम, मिनिमल है, 1% का, 1%. तो पहले हमने निर्णय लिया था कि एक्ट अमेंड कर दिया था कि जिसके तहत कॉम्पोजिशन की लिमिट 1 से 1.5 करोड़ रुपया कर दी थी. पहला निर्णय आज काउंसिल ने लिया कि 1 अप्रैल 2019 से कॉम्पोजिशन की जो एग्जिम लिमिट है वो 1.5 करोड़ रुपीस तक होगी, 1 करोड़ 50 लाख तक. और क्योंकि कॉम्पोजिशन स्कीम का लाभ उठाने के लिए कई छोटे व्यवसायिक आए हैं, तो इसको बढ़ाने का एक ये लॉजिक था. 1.5 करोड़ करने का दूसरा लॉजिक भी था कि पुरानी एक्साइज स्कीम में 1.5 करोड़ तक उनको छूट थी एक्साइज से, तो इसलिए जीएसटी स्ट्रक्चर में उसको एट पार 1.5 करोड़ ले आए और उस कॉम्पोजिशन स्कीम को अगले फाइनेंशियल ईयर 1 अप्रैल से 1.5 करोड़ कर दिया जाएगा. दूसरा निर्णय कॉम्पोजिशन के बारे में ही था कि जो लोग कॉम्पोजिशन स्कीम में जाते हैं उनको टैक्स तो अपना क्वार्टरली देना पड़ेगा, लेकिन सिंप्लीफिकेशन की दृष्टि से उनको रिटर्न अब साल में एक बार देना पड़ेगा. सो फॉर दोज हु यूटिलाइज द कॉम्पोजिशन स्कीम फ्रॉम 1 April onwards, it will be quarterly tax payment, but only one annual return. So this takes off a lot of compliance burden from them. The third decision, also for composition, is relating to the services sector. Under the service tax regime, there was no composition in the case of service tax. But a large number of services are provided by people in the informal sector And therefore, for them to undertake the compliance burden if they want to come within the tax net is quite cumbersome. And therefore, those who are providing services as also mixed supplies, goods and services, will now, with a turnover up to rupees 50 lakhs, be entitled to the benefit of a composition scheme. Because in services, there are no comparable inputs as in the case of manufacturing or trade. The composition rate for services has been put at 6%. So upon a 6% payment, those who render services up to rupees 50 lakhs or render mixed supply services and goods. Let us say an electrician coming to a house, a plumber, or any such services in whichever sector, it could be IT, it could be any form of services, would be entitled to a composition if the turnover is up to 50 lakhs upon payment of 6%. This 6% is lower than the average service tax which was being paid, or the average GST which was being paid by service providers up to a 50 lakh limit. The other important decision was in relation to the exemption limit for GST. Under the original GST structure, when we envisaged it 1.5 years ago in July 2017, the GST structure provided those with a turnover up to 20 lakhs with an exemption, कि जिनकी 20 लाख तक टर्नओवर थी उनको हमने एग्जेम्पशन दी है। और जहां तक नॉर्थ ईस्ट और हिल स्टेट्स थी उनकी एग्जेम्पशन लिमिट 10 लाख तक थी। लेकिन उन नॉर्थ ईस्ट और हिल स्टेट्स में जम्मू कश्मीर, असम और अब धीरे धीरे कई अन्य स्टेट्स ने भी अपने कानून अमेंड कर लिए और अपनी लिमिट को वो 20 लाख पे ले आए थे। तो ये तय हुआ कि वही ट्विन स्ट्रक्चर चलेगा। अब 2 प्रकार की एग्जेम्पशन लिमिट्स होंगी। पहली वाली का स्लैब 40 लाख होगा, यानी कि जो 20 लाख था उसको डबल कर दिया गया है। तो जिसकी 40 लाख तक टर्नओवर है, अगर वो जीएसटी चेन का बेनिफिट नहीं क्लेम करना चाहता तो वो एग्जेम्प्टेड रहेगा। और जो इन छोटे राज्यों के लिए जो 10 लाख की लिमिट थी उसको 20 लाख पे रखा गया है। लेकिन इसमें एक ऑप्शन दे दी गई है, जो पहले छोटे राज्यों को थी, कि वो अगर 20 लाख के स्थान पर अपनी लिमिट रेज करके 40 लाख पे लाना चाहे तो वो ऑप्ट आउट करने की उनको डिस्क्रिशन दी गई है। दैट इज दे कैन मूव अप, जैसे पहले भी कुछ स्टेट्स मूव किए थे। कोई ऐसे राज्य, क्योंकि एक आध ने कोई ऐसी व्यू रखा था कि जिन अन्य राज्यों को 40 लाख पे दिया गया है कि उनका एसएससी बेस काफी इरोड होता है पहली कैटेगरी में, लेकिन छोटे हैं। तो अगर एक सप्ताह में वो इतला कर देंगे सेक्रेटेरिएट को, तो उनको भी ऑप्ट डाउन करने की सुविधा दी जाएगी। इसमें पुडुचेरी ने विशेष रूप से ये ऑप्शन रखा था। तो 40 और 20 दो लिमिट्स रहेंगी, 40 सब राज्यों के लिए और 20 नॉर्थ ईस्ट और हिल स्टेट्स के लिए, with a caveat that you can opt up or opt down depending on the revenue। और ये इसलिए वन टाइम एक्सेप्शन है क्योंकि ये पहले भी था और क्योंकि इसका इंटरस्टेट सप्लाईज के ऊपर असर नहीं पड़ता उसके रेवेन्यू पे। तो दिस इज अ वन टाइम एक्सेप्शन बीइंग ग्रांटेड, दिस हैज बीन आल्सो स्पेसिफिकली रिकॉर्डेड। एक अन्य डिसीजन था जिसका आरंभ कुछ मीटिंग पहले केरला से शुरू हुआ था, जीओएम की रिपोर्ट कंसिडर की गई। इनमें कई अन्य विषयों पे भी जीओएम्स की रिपोर्ट्स थी। तो केरला इज नाउ इंटाइटल्ड ऑन इंट्रा स्टेट सेल्स, दैट इज सेल्स विद इन केरला। द काउंसिल हैज ऑथराइज्ड केरला टू इम्पोज अ मैक्सिमम सेस ऑफ 1% for a maximum period of 2 years. The outer limit of the cess will be 1%. The outer limit of the period will be 2 years. And this is as a part of the, there is already a provision in the GST law that the council can permit some states to make a levy on such terms and conditions and for such period in order to cope up with natural disasters. तो GOM में recommendation थी, Kerala also accepted this decision. These issues, the decisions were taken. There were two other items, one relating to real estate and the other relating to uniformity of taxation on lottery और अदर इश्यूज अराइजिंग आउट ऑफ लॉटरी। इस पे अभी दोनों पे डाइवर्स ओपिनियंस थे काउंसिल में, और जो हमारी पास्ट प्रैक्टिस रही है कि हम सब कंसेंसस और यूनानिमिटी से तय करते हैं, आज के भी सारे डिसीजंस कंसेंसस और यूनानिमिटी से हैं, जिसमें कहीं डाइवर्जेंस ऑफ ओपिनियन भी होता है तो एंड में वी टेक अ बैलेंस व्यू एंड दैट बिकम्स अ कन्वर्जेंस बिकॉज इट्स अ फेडरल बॉडी। तो इन दोनों सब्जेक्ट्स के लिए हमने रियल एस्टेट के लिए एक 7 मेंबर जीओएम रहेगा जो अपनी रिकमेंडेशन देगा, जो अगली मीटिंग में कंसिडर करेंगे, और इसी प्रकार का लॉटरी का भी एक जीओएम रहेगा जिसमें लॉटरी डेवलपिंग एंड सेलिंग स्टेट्स का हम रिप्रेजेंटेशन रखेंगे, क्योंकि स्टेट्स के इनमें कॉन्फ्लिक्टिंग इंटरेस्ट थे। तो उसकी वजह से कन्वर्जेंस लाने के लिए इसको जीओएम में उन स्टेट्स के बीच में एक बार बात हो जाए और वो इसको केंद्र में लेकर आए। ये ब्रॉडली डिसीजंस आज काउंसिल में लिए गए हैं। नहीं, मिक्स सप्लाई मैंने कहा सर्विसेज के संबंध में 50 लाख कॉम्पोजिशन लिमिट है, दोनों की मिला के टोटल। You see, I'll tell you, we will consider any further reductions on individual items only when revenues move up.
So, how many taxpayers benefit from increasing threshold to 40 lakh and 20 lakh for states and how much does that cost in revenue?
Yes, as a total number of the taxpayers, if we increase the limit from 20 to 40, what we have estimated is that around 20 lakh taxpayers will be eligible for availing this benefit.
You see, please understand, eligibility and entitlement are one aspect. How many actually do it may not be the same, because some out of them may still want to be a part of the GST chain. Some may require it for their banking purposes. Some may actually opt in for the composition. और क्योंकि हमारा एक्सपीरियंस 20 लाख का भी है कि इवन दो अप टू 20 lakhs it was exempted, there are many below 20 lakhs who still got a registration for the purposes of benefiting from the GST chain. It's actually notional.
Notional. It is a notional because if you see that today the limit is 20 lakh, but still there are about 10,93,000 taxpayers who are below 10 lakhs.
20 lakhs.
Yeah, below 20 lakh, and then they are paying us taxes. So therefore, you know, you know, if we increase the limit to 40 lakhs, it is only will be a...
See, you should understand it in this concept. A very large part of the GST comes essentially from the formal sector and the large companies. Each one of these decisions is intended to help the SMEs. So you've given them various options. If they are in the services sector, they can get a 1% compounding. If they are in manufacturing or trading, services means 6% compounding. If they are in manufacturing or trading, up to 1.5 lakhs crores, they can get a 1% compounding. They can make use of the exemption up to 40 lakhs.
जो लॉटरी और हाउसिंग पर जो जीवन बनाने का फैसला लिया गया है, इस जीवन के लिए कोई समय सीमा निर्धारित की गई है कि कब तक जीवन को अपनी रिपोर्ट सौंपनी है और क्या बजट से पहले कोई जीएसटी काउंसिल की बैठक होनी है?
देखिए, इसमें हम सीमा नहीं देते, लेकिन हमारे जीओएम्स का अनुभव ये है कि एक कमेटी मीटिंग में जाता है तो होपफुली डिपेंडिंग ऑन व्हेन द नेक्स्ट मीटिंग इज हेल्ड, the GOM works during that period. And the reason why GOM in this case is appointed, as in every case we do it, where the issue requires a deeper examination or a deeper understanding for the purposes of developing a consensus.
No, no. Right now, you see what has been approved is that increase the limits only for those who are dealing in goods and also intrastate, not those who are doing the interstate transactions.
Thank you. अब मैं स्पेक्युलेट नहीं करूँगा।
Sir, on the shortfall, because this is the last meeting before the budget. What was discussed on the shortfall?
Central revenues are not discussed in the GST Council.
So revenue shortfall is discussed, right? Revenue shortfall.
You see, revenue shortfall was discussed in the last meeting. A presentation of 1 more month was made to the members today. There was no discussion on it because we just discussed it in the last meeting.
Okay, that's the view from Finance Minister Arun Jaitley, and no dramatic changes. The GOM has been formed to decide on rates for real estate. The expectations were that the rates would come off. I think for now there is a committee, and the slabs I think have been changed a little bit. I don't know if real estate stocks will really dramatically rise or etc. on the back of this news. Don't quite even know if some of these companies which are in the listed space that get materially impacted by this. But you never know, there could be some upsides, some trading upsides out here. The exemption limit is 40 lakh per annum, hike from 20 lakh per annum. Anyways, we will talk about this in post-market hours because there's just 6 minutes left for the markets to shut shop. So we'll focus on that for a bit. And once we finish market hour coverage is when we will talk about this with experts as to what to make out of this as well. But last 6 minutes of trade left, let's focus on specific pockets of strength or weakness on the markets. Firstly, 2-hour trading experts and getting closing strategies first. Hadrien, Mendonca, your top closing strategy.
Yeah, so I'd go with Kajaria Ceramics. The stock, has taken a pause in the past 2 days, but if you see today's move again, it is resuming its up move, and I think once again after a pause, we are expecting Kajaria to stage a very strong rising momentum. I think one can consider going long for the target of 552, 555, keeping a strict stop loss at 510 on the downside.
What about you, Abhijit? Your top call?
Yeah, I've already given two. Another two is one is Reliance and one is Maruti. Both are looking to rally in the next few days. So with a stop loss maybe about 1.5–2% below today's low, they can be bought for a 3 to 5% rise from here.
Very good. Nitasha, just a quick thought out here, and thank you so much for waiting by patiently. Not that I think materially impacts any of the listed real estate names, but a few changes done at GOM, approved for rates. I mean, do you think there is enough being done to revive demand in a sector which is seeing sagging demand?
Not really. We think that it will take some time for the real estate sector to come out of the woods. I mean, credit offtake, especially on the real estate side, has been quite low, especially with the NBFC issues going on. And at the same time, the real estate companies have also been languishing with weaker balance sheets. So we really don't think that in the listed space we could see material changes coming in because of the changes announced today.
Okay. Well, what else? Just some moving pockets, some stocks that have moved around in the last few minutes. You know what? Something that I just want to know if there is a trade then somebody can take on TCS as we hit the last 5 minutes of trade before the TCS numbers will come out post-market hours. And that would be my question, Abhijit. Looking at the options data, is there a trade that you would risk right now on TCS?
TCS is range bound between something like 1870 and 1940, 1950, and right now it is at the lower side of the range. So if one wants to take a contrarian bet, maybe a 1920 or 1940 call. But again, if TCS moves very big tomorrow, only then it will pay. Otherwise, he'll have to exit at loss tomorrow morning if TCS opens weak or even flat.
Any banks in that list, Hadrien?
Yeah, Yes Bank, as we spoke earlier, in a stock, as we said that keeping a stop loss of 178, it would be good for an upside move towards the 195-200 levels. I think the move has already begun, and I think it's quoting around 187, 188 if I'm not wrong. Definite long positions are being witnessed in the last half an hour of trades, and I think that momentum can get carried forward. Provided the news that is being speculated on comes out to be a positive one. The price move is actually intending that we could see a good up move going forward.
Okay. Fertilizers continue to be active today. No specific reasons, but those stocks are doing well. 3 minutes left for the markets to shut shop. Just quickly wrap up the markets and then get in final thoughts and then get in a discussion on all that's happened as well. So 15:27, about 3 minutes left for the markets to shut. Nitasha, before we wrap up this discussion, quick thoughts based on all that's happened in the run-up to the budget, all the moves that are being taken by the government, GST rates being slashed, etc. Quick 1 minute answer. Positive markets or neutral markets or negative markets?
I think the markets would remain largely range bound because you would see patches of recovery coming in certain sectors, especially in consumption, retail, BFSI as well. But other sectors like engineering, energy, which are also a significant portion of the market, could see a certain amount of weakness coming in.
Okay, great. Nitasha, afraid we'll have to leave it at that. Just one of those days. Thank you so much, though, for being patiently with us and giving us your thoughts as well. Really appreciate your time.
Thank you.
That's the view from Nitasha. Shankar, let's start wrapping up the markets. Just a couple of minutes left for the markets to shut shop. And I'll start off with the large caps. Then I'll bring you up to speed with what's happening at the mid cap and the small cap end of the market. Titan, Tata Motors, Eicher Motors, autos have actually had a good day today. So those are the ones that are leading the charge higher. Watch out for Tamo, 185 and counting. Eicher Motors, 20,526. Bajaj Auto has about 1% kind of gains, and Mahindra & Mahindra nearly 1%. So 3 or 4 names from the auto pack are doing rather well for themselves. Strength in Bharti Airtel, about 0.75%. Adani Ports, about 0.75%. So 2 or 3 names which have stood out aside of autos too. Yes Bank at 187, 0.5% higher, doing reasonably okay for itself. What's not doing well though in today's session, I'm not surprised that oil marketing companies have corrected. So HP, BP, IOC correcting a bit. Maruti Suzuki, that exception in the auto pack, down about 1.5%, and Kotak Bank about 1.5%. So private banks, by and large, have looked slightly wobbly in the session today. IndusInd Bank, 2.5% lower. What about the mid-caps?
Well, within the mid-cap space this time around, there has been a slight bit of an outperformance there. Stocks like Vatek Vabag is up 14.5% in this session. Linde India is up 7.5%. AstraZeneca is up 6.5%. Like you said, fertilizers as a space is doing okay. So RCF is up 6.5%. Then you've got the likes of Deepak Fertilizers, Chambal Fertilizers, both the counters still adding up into today's session. Vakrangi 5% higher on getting that clean sheet. Adani Transport, that's up 4.5%. Trident is up 4.5%. Max Financials as well, so 4.5% gained on that one. 458 is where it's trading at. Colgate Palmolive, Group Finance, a breather, 2.5% higher, and Bandhan Bank should be the last one in focus. Came out with its numbers and did not disappoint this trade, so 3.7% higher for Bandhan Bank. With 17 seconds left to go for market closing, keeping a close eye out on what the banks are doing as well. The smaller banks have actually given up in today's session, so the likes of a UCO Bank, Allahabad Bank, Syndicate Bank, these are the names that have actually lost ground, and the drag has come about not just on the bank nifty but with the larger names losing ground. That's pulled a little bit of pressure on the nifty itself. That's the market closing for you on your screens, and a few stocks coming up there. Nifty at about 10,815, down 1/3%, and so is the case with Sensex. 36,105 is where it's trading at. Should look at the advanced decline ratio and then take a quick check on the turnover before we get closing comments from our experts. At day's close, 745 advances, declines of 791. So almost at an even keel. Right from mid-afternoon till now, that has been the case. And a big number there on the turnover, Neeraj. NSE F&O, 16.5 lakh crores from 11.5 lakh crores yesterday. So that number, in fact, is doubled in terms of the average number of 7.5 lakh crores that we've been witnessing on a usual basis.
Yeah, options expiry, so expected as well. Yeah. Okay, just before we dwell full tilt into the GST discussion, 30 seconds views each from both our experts. Abhijit, Phatak, the next 2 days, bullish, bearish, neutral?
Bullish on dip. I wouldn't say buy here, but bullish on dip, and definitely buy above 10,930, which I said earlier. So that will be a very big breakout towards 11,100, 200, but not at these levels. Bullish on dip.
Okay, thanks. Hadrien, Mendonca, quick thoughts, 30 seconds. What's your market outlook?
Yeah, Bank Nifty definitely bullish only if the 27,785 level is broken pretty convincingly. Otherwise, I think profit booking is set in the coming 1 to 2 days.
Okay, Jamin, really appreciate your time. Thanks so much for taking the time out and joining us and giving us your perspectives. But the big development that happened, I think on the other side of the break, Pasmin will join in to take us through an entire conversation about the highlights of today's meet and the way ahead. Thanks so much for watching Bloomberg Quinn from the Definedge team that put this show together. Thanks for tuning in.